right. All right. Good morning, traders. Happy, what is that? Valentine's Day Eve. My name is Daniel. I'm with VantagePoint, and we're going to be talking about the view from my vantage point today, CPI post-earnings forecasts. We're going to give everybody a chance to get logged in here. So just getting started, just getting kicked off. Today is February 13th. It is 11:30 a.m. Welcome. Welcome. All right. Looks like we're getting people set up here. See people joining the live right now. This is your warning for anybody that is interested. Valentine's Day is tomorrow, so if you haven't picked up that card or that gift for your special somebody, this is your last chance. Maybe make it over to the store, get some flowers, cook dinner, something. Who knows? But for those of you that enjoy Valentine's Day, happy Valentine's Day Eve. We're just going to give everybody a second to get logged in before we kick things off here. Welcome. All right, we got some people joining here now. So this is the view from my vantage point. My name is Daniel. I'm with VantagePoint AI, and we're going to be taking a look at the VantagePoint software and just walking through some general market analysis. Busy week this week from economic readout standpoint. Right, we had some inflation numbers come out at 11. We've got CPI data coming out tomorrow afternoon. So be interesting to see what happens with the market. We're going to walk through some of the details in today's session once we get things going. So, hey, good morning. Good morning. Candor, thank you for joining. Appreciate that. I'll keep my eye on the chat box best I can and make sure if any questions pop up or any chats come through that I can answer them on the fly. For those of you that just joined, again, my name is Daniel. I'm with VantagePoint AI, and this is the view from my vantage point. We are going to dig into the details today related to CPI. We're going to review some stocks post-earnings forecasts related to Tesla, Disney, American Express, Apple. We'll take a few minutes to dig into those details as well. So just want to make sure everything is working from a broadcast standpoint. It looks like we are. Hey, Joe, good morning. It looks like we're ready to go. So talk to me. Last week we went through some of the FOMC minute expectations. We went through some of the notes, and we talked about specifically what CPI is, the Consumer Price Index. And just a quick reminder of what that is. A Consumer Price Index measures the monthly change in prices paid by the consumers in the U.S. So when we're talking about the Consumer Price Index, what does it mean? Do me a favor, if you're in the room and you've got a pretty good handle on CPI and you want to give me in the chat box your take on what CPI really means for the economy, either as a consumer, as a trader. Always interested in hearing feedback related to that information. Being that CPI is such an important measure, let's talk about that for a second, because until CPI or inflation is on the rise or extremely high, this isn't something that traders dig into in a lot of detail. And that's just because it's not something that is moving the markets drastically, has an impact on the markets on a consistent basis. We know that. But it wasn't until about mid-year last year where inflation, from a retail trading standpoint and individual consumer standpoint, wasn't being discussed at all levels. Obviously, you tune into some of the networks are talking CPI, you're doing some fundamental analysis. That's a real part of fundamental analysis. But we really saw an uptick middle of the year last year, into the end of the year last year as well, related to CPI. And there's a reason for that. You can see on the screen that I've got here, CPI was at 9.1% in June of 2022. That's extremely, extremely high. There you go, Lorvins. It controls all the trading goods from the consumer standpoint. That's something that some people believe that it controls the goods. The consumer price index is a measure really of what consumers are paying, right? Hey, good morning, Paula. And the more that you end up paying as a consumer, the higher inflation is, the more you end up paying, spending starts to slow down, right? The cost of things increases. People aren't willing to spend their money as freely as openly, and that inflation has an impact on the market. It's got an impact on the market, and we know that that's the case. Hey, Kendra, I appreciate your question. Why don't you do this live after trading hours? Because this is a forecasted information. This is information that we're going to use today, we're going to use tomorrow and the next day, and it's available for everybody at any time. But I appreciate that recommendation. Always looking for interested, parties. So thank you for that. So back to consumer price index, the high, the 9.2%. I've got an image here I can pull up. Here's a great little image related to consumer price index from investing.com, and you can see the high that I was talking about was up here. This is where the 9.1 CPI rating was, and you can see throughout the end of the year it dropped steadily, and then last month I think the forecast was 6.5%, and it came in from a CPI index right at 6.5%. That deflation, if you will, or that drop in the consumer price index has a lot to do with what we talked about last week related to the FOMC and the Federal Reserve increasing interest rates. By increasing interest rates, it curbs the spending and the borrowing primarily of businesses and consumers. And by curbing that, interest rates go up, borrowing decreases, inflation is impacted. And that was the goal of what the FOMC was doing by increasing rates. And still, last week or a couple weeks ago, we still had a rate increase, not a big one. There was some promising words, and they're related to staying vigilant and deflation, potentially being part of what we're seeing happening. So that was all part of it. Well, the last CPI forecast that we have for tomorrow, from what I've seen everywhere, is around 6.2%, somewhere in that 6.2%, which would be a slight drop from the 6.5 CPI that was read out previously. I'm talking about the year-over-year readout that happens on a monthly basis. And in this case, what people are expecting is between that 6.2, 6.5 CPI. Well, the question is, what does that mean for the overall markets, right? What could that do from a trading standpoint to the markets? You tell me. You tell me in the questions box. Hey, Taya, thanks for joining. I see you just joined in. Good. What if it's expected to be 6.2, but it comes in at 6.5? What's your take? What does that do to the markets if it's expected to be 6.5 and it comes in at 6.5? No change from the last readout. What does that mean for the markets in your perspective? Always interested, if you want to, in the chat to give me your perspective. The key here is just the fact that there is an impact, right? There's an impact to the markets. The drop in CPI that's been happening the last few months due to the increase in interest rates has some people feeling like the markets are stabilized, has other people feeling like there's still a recession coming, and there's a lot of measures in place. But what we know from an overall market standpoint, there's been some bullishness, and not to mention earnings, right? A drop in CPI. At the same time, there's been some good earnings readouts from some of the big companies, not all of them, of course. If earnings haven't been good, subscribers have been up in some cases, revenues have been up in other cases, and that has helped some stocks really, generate some positive returns. And we're going to look at some of those. We're going to walk through the details on those, but I wanted to just dive into CPI a little bit and know that tomorrow there's a readout, 2 p.m. We're looking for that, and that's going to be around the year-over-year CPI readout. That's the one that most people are watching and interested in. The forecast is 6.2, down 0.3% from the 6.5 last readout. And that's important to understand. If it comes in at that forecasted mark and it's a drop in CPI, most people are expecting an increase in the overall market, right? We're expecting some bullishness to follow that. If it comes in at 6.5 with no increase, does that mean we're expecting somewhat of an increase, or could we see a drop? It comes down to trader sentiment. In my personal opinion, if we see a drop in CPI, or at least another stabilization in CPI, coming in at the forecast of 6.2 or around that 6.2, 6.5, then we could see some bullishness in the markets. And we'll take a look at the VantagePoint software here in a second. For those of you that just joined, my name is Daniel. I'm with VantagePoint Software. We're going to be digging into some forecasts around the software and digging into the markets. Just wanted to create a little conversation around CPI since it's a hot topic, since it's something that people are watching and looking at. And it's something that people should be watching. It's been a hot topic lately. And with the report coming out tomorrow, it's important to understand if CPI drops, what that could do to the markets. All right, so that's something that we'll look at as a group here today. All right, so let me flip over to VantagePoint right now. As a matter of fact, I'm going to pull up the screen here, and I'm going to bring up. Let's bring up the S&P 500, right? And we'll do that by way of the SPY. For you ETF traders, stock traders out there, you could look at the S&P 500. You could look at the SPY. I'm bringing up the SPY, and I'm bringing up the forecasted information for the SPY. There we go. For those of you that are interested in understanding where this forecasted information comes from, let's take a second and dig into that, because there's several indicators that are on this screen that I'm going to walk through and read in detail. But before I read those, I want to just stop for a moment, because this is the VantagePoint software that I use as a basis for my technical analysis. It provides forecasted information up to 3 days in advance with accuracy up to 87.4% accurate. And a lot of times when I get questions around how is the accuracy that high related to the forecasts, I want to give you a quick insight. I'm going to go into the inner markets, we call them, right? I'm going to go into the market details. I'm going to pull up this little diagram that shows you for the S&P 500, for the SPY specifically, what is the artificial intelligence looking at? And then we'll walk through the individual forecasts that we're looking on the S&P. You can see right in the middle of the screen here, we can see that we've got the spider, the S&P 500. That is the target market. And the AI, what it's doing is it's going out and it's analyzing, millions and millions of data points from around the world, tens of thousands of markets from around the world to figure out what's influencing the S&P or the SPY. And in this case, you can see there's a lot of different markets here. If we walk through some of them, as a matter of fact, I'm going to grab a pen really quick, just so that I can draw on the screen and make sure that everybody can see, where it is I'm pointing. So give me a second to just pull up a quick drawing tool. Here we go. All right. There we go. Right here in the middle of the screen, we can see the SPY. We're looking at the SPY, and when we look at the SPY, the AI has gone out and done some analysis to figure out the diamonds. Well, the diamonds is the Dow. We would expect that, and the Qs, right? The NASDAQ, to have an influence on the S&P 500. That makes a lot of sense. That's an obvious market. Some of the other things that we can see in here are like gold. Gold is influencing it. Japanese yen, that's a currency. Euro, we can see that. Now, not only is the Dow from a ETF standpoint, but because it's a separate asset, here's the Dow from a futures standpoint influencing the S&P 500. Interest rates. Just looking at this list, and the reason I pulled this up, for those of you that just joined, my name is Daniel. This is VantagePoint Software, and it does global market analysis to forecast trends. And I get a lot of questions around how it's doing that analysis. Well, first of all, it's artificial intelligence. Second of all, it's scanning markets around the world, 10,000 markets around the world to figure out what's influencing the SPY. So we're looking at this on the screen, light sweet crude in here, and a host of ETFs. Some other stocks, CenterPoint Energy. So some of these things you would expect, some of these things you wouldn't expect or haven't seen before. That's the benefit to the artificial intelligence. It's doing this analysis behind the scenes, and it's doing something that is humanly impossible to do. There's no way I'd be able to figure out by looking at the open, the high, the low, the close, the volume, the open interest, all of those data points for over 10,000 markets around the world, and then figure out which markets are influencing the SPY the most and what direction they're going to push the SPY. That's what the AI is capable of doing, and that's what it's doing in this case. And that is a patented technology. There's nobody in the world doing analysis like this, which is why I use this tool. I use VantagePoint software as my base, as my technical analysis to dig into the markets and understand what's expected, right? So a couple of the indicators that I'm reading right here is this blue line. This is a predicted moving average. It has the ability to predict the trend direction in advance. For those of you that haven't seen this before, when that shaded area between the lines is green, that's giving me some very clear bullishness. And when that blue line finally crosses below and that shaded area turns red, that would indicate a bullish trend expectation over the next couple of days. Just so you know, each candle here that I'm looking at is end of day data. I primarily rely on the end of day data in VantagePoint to do my analysis. It comes out at 6:30 p.m. Eastern time. So those of you that are in this session right now that have VantagePoint, what we're looking at is the 6:30 update from Friday evening. That would be the 10th, and it forecasts for Monday, today, Tuesday, and into Wednesday, the next 3 trading sessions. And because we're looking at end of day data, we can understand that as 3 days into the future. Now, from a forecasting standpoint, what I'm noticing here is that the blue line is clearly above that gray line, and the shaded area is green, but we've got a little flattening. We've got that blue line rolling over and pointed down here at the end. Well, what that tells me about the S&P 500 is that there's still some bullishness expected, but there's some consolidation happening. And that started back here, right? We had consolidation. We had that blue line roll over and start to point down. We've certainly had consolidation since that forecast a week and a half ago. That's still the case here, but we don't have a trend forecast or a trend change forecasted for today. That's an important thing to understand. You know, when you take a step back and you think about it, it's saying that there is some consolidation happening, but the artificial intelligence has said not to the point of a trend reversal, but to the point of a pullback, right? Some consolidation. We know, and some of you know that when consolidation happens, that's the market getting positioned for a move one way or the other. And that's where this artificial intelligence really can provide some valuable information, because which way is that move expected to go? And that's what we're going to look at right now. It's CPI data is coming out tomorrow. Again, for those of you that weren't here earlier, that CPI forecast is 6.2%. The last reading was 6.5%. So interested to see whether we come in around that 6.2 or whether we come in around that 6.5. Either way, it's going to have an impact on what the market does and what the artificial intelligence is saying, because we don't have a trend prediction saying bearishness, that we still have some bullishness. And I can go to a longer term predicted moving average, by the way, for those of you that pull in more data into your analysis. One of the things that I like to do is cycle through all of the predictive trend indicators. Right now, what I'm talking about is the blue line, right? That blue line is a predicted moving average that forecasts the trend direction up to 3 days in advance. I have a 1-day prediction that's here, right? I have in the 1-day prediction, we can see there's some bearishness from a 1-day standpoint. I have a 2-day prediction. We see consolidation happening, but still some bullishness. And I have a 3-day prediction saying that there's still some bullishness and some consolidation happening. So no matter how we slice it, what we're seeing is consolidation. The 2 and the 3-day are indicating there's still some potential for bullishness in the trend. Now think about that. Let's think about that for a second. With CPI data coming out tomorrow, with the expectation being 6.2%, or the forecast as they like to say, and last readout being 6.5, if the artificial intelligence that's picking up on hidden patterns and relationships, right, those minute patterns that are found in price, are saying there's consolidation happening, but still some bullishness left in the market, what does that mean if CPI data comes in at 6.5 or below, or 6.2 or 6.3? What does that mean for what the market is expected to do? I think you can sense what I'm saying here is that there's definitely consolidation. Where is this consolidation coming from? Well, trader sentiment, right? People are waiting for the readout tomorrow. Last week was the worst week for the markets in 2023, right? That consolidation ahead of the CPI readout, after the FOMC readout, during earnings. I mean, think about all of that fundamental activity that's happening over the last couple of weeks, especially last week and into this week, causes traders, you, me, a lot of different people out there to, start to just wait and see. And it causes the markets to consolidate as people position themselves for the different types of information that are available. And in this case, what we're seeing is clear consolidation forecasted with a little bit of bullishness left in it. Looking at the SPY, you can see that there's this gray bar over here. Just to do some quick analysis on the gray bar, this is a predicted high and predicted low in the software. It tells me what I can expect from a range in the markets from a SPY standpoint. If I'm looking at the SPY and I'm trying to figure out, what can I expect on Monday? Well, what VantagePoint is saying here is that we've got a predicted high, right? A predicted high that's much higher than the previous day's high. Well, that means that there is certainly some bullishness in this market today. The predicted high is 410.70, right? The predicted high is 410.70, saying that we could see the market up around that 410 mark. The SPY, let me pull it up here and take a look. Right there, 412. So we knew going into today that we had a high that could go up to that 410 mark. 410.70 was the predicted high, the predicted low 404. And with that bullish 3-day prediction or consolidation happening on top of this bullish trend, that's valuable information that I would have had on Friday at 6:30 p.m. Eastern time, knowing through the weekend what was expected today. Nothing about today is a surprise at this point, and wasn't going into today expecting a dramatic drop. I wasn't. If you have VantagePoint, you probably weren't either. Consolidation is a real thing and the market needs some consolidation, but the AI is saying consolidation is expected. Nothing dramatic or drastic happening from an overall trend standpoint. And the predicted high being extremely high at 410. What was the close on Friday? Friday's close 408. So we're talking about $2 plus. And we've seen more than that. Obviously, we've seen more than that in the SPY. But that's what the artificial intelligence was saying about the trend and the predicted high. There's also some other indicators that give me some strength readings, like the predicted neural index being red. That's this green and red bar for those of you that haven't seen this before. This is where the artificial intelligence has gone out and analyzed the overall strength in price, whether we're expecting price movements to be higher or lower. And we can see that that bar is red, indicating strength being bearish. So we've got some conflicting indicators going on, right? We've got consolidation from the predicted low. We've got bullishness from the predicted high. We've got consolidation with some bullishness from the trend prediction. And we've got the strength prediction indicating some bearishness. So when we see this, where the indicators are providing us different perspectives, some bullish, some consolidation, some bearish, what does that mean? Do me a favor. If you're looking at predictive indicators that I give you multiple answers, consolidation, bullishness, and bearishness, what does that tell you about the expected market conditions? Go over to the chat box really quickly and just let me know. I'm always interested in understanding, the trader mentality. One of the things that is always difficult is taking the emotion out of trading. So to take the emotion out of trading, we add a little bit more logic to it. And I'm asking this question because if I'm adding logic to that scenario and saying I've got multiple predictive indicators generated from the artificial intelligence, not in total agreement, right? Some say up, some say down, some say sideways. Well, if we apply some logic to that hypothesis, right? We have to understand if our expectation, our hypothesis is that there's bullishness expected. But I have indicators, some saying bullish, some saying sideways, and some saying consolidation. Does that support the bullish hypothesis, or does that reject that hypothesis? And I know sometimes I get a little too logical, but when I take the emotion out of it, the predictive indicators generated from the artificial intelligence are not in agreement, which means I've got some consolidation happening. I've got whatever inertia that trend has is not expected to change because the predictive indicators that are doing that global market analysis that we looked at are not in agreement. I love to use an analogy in this situation, and the analogy I like to use is, that you guys probably remember that dentist commercial, right? 4 out of 5 dentists agree, or 5 out of 5 dentists recommend. Same thing with this. I've got, we've looked at multiple predictive indicators. We've actually looked at individual indicators. We've looked at 3 trend predictors. We've looked at a predicted high, a predicted low, that's 5, and a strength, that's 6, right? Sideways, okay. Thank you, Stephanie. I appreciate the chat in. I see you wrote in sideways. It's, if 6 out of 6 dentists don't agree, well, that's probably not a product from a dental standpoint that I'm leaning into, right? Candor, the platform, the software that I'm using is called VantagePoint. And by the way, for Candor and anybody else that's interested, you can go to VantagePointForecast.com if you wanted to get some individualized questions answered, or you wanted to dig into the software in a little bit more detail. Thank you, Lorvins. I see your answer there. We'll move sideways. And that's taking the emotion out of it, right? The indicators are saying, could go up, could go down, could go sideways. That's valuable information. So many times, and this is my perspective. This is purely education. Everything I'm going over today is not intended to be trading advice, education and opinion. But so many traders are expecting the market to move higher, move lower. Got to remember, sideways is a direction. Sideways, in my opinion, is healthy at certain times in certain trends. And the artificial intelligence doing the analysis and saying, sideways is expected with a little bit of bullishness to it. And here's why I say the bullishness. The trend has been bullish, right? Although last week was the worst week of the year for the markets for 2023, that doesn't mean it's a trend reversing week at this point, right? According to what the AI is saying. And we're looking at the SPY for the artificial intelligence. All right. So let's keep on looking at this, because why am I getting that bullish sense? Well, we talked about that predicted high. We talked about that trend has been in a bullish trend and we don't have a major reversal forecasted here. But I want to draw your attention down here to this light blue line. There are 3 lines down here. And what I see is I've got a short-term momentum indicator, right? That's a 1-day prediction of momentum. I've got a 2-day momentum indicator. That's a 2-day prediction of momentum. And I've got a 3-day momentum indicator, right? That's a 3-day prediction of momentum, all right? So when we look at that, we say, all right, what does that mean? Well, that means I need to read the slope of the line. These are oscillators. And if I put them on the chart one by one and read them one by one, I could start at the 1 day, that aqua blue line, and say, from an oscillator standpoint, I can see it's creating lower lows, right? Lower highs. But I've got this bullishness on Friday that worked in to say, oh, the 1-day momentum is increasing. We can see that happening. The 1-day momentum is increasing. And that's an important thing to understand, because this entire trend goes back to here. If I look at the lows of this trend, I can see that this trend is producing higher lows. This trend, right? Here, I'm going to drop a line for you to show you what I'm looking at really quickly. I'm just going to go grab a line and put it on the day that this trend was expected and forecasted to go up higher by looking at the long-term crossover in VantagePoint. That date was 1/6, right at the beginning of the year. We got a forecast on the 3-day. We got a forecast earlier than that on the 2-day. But why I'm highlighting this is because I'm reading this oscillating line right here, this light blue line, and figuring out whether or not it's giving me some bullishness in this trend or bearishness. Well, here's the low of the trend from a momentum standpoint. Here's the latest low from last week. And if I connect those 2 lows from this trend, I can see that I've got a higher low created in this trend. That's, again, a piece of valuable information. That's on top of the short term, the fact that we've got some lower highs happening here. Again, more information providing me bullishness in one view, a little bit of bearishness in another view from the 1-day prediction. My 2-day says that momentum is still bearish, and my 3-day says that momentum is still bearish, coming off of this double top. This double top right here, this is the top of this 3-day momentum. This is the top of this 3-day momentum. And you can see momentum is shifted off of the 3-day bearishly. So again, I've got some momentum indicators in disagreement here. So like a lot of you have already said at this point, this is the artificial intelligence indicating the current trend has some consolidation happening, not a trend reversal, a pullback, consolidation, and some sideways movements expected, seeing the potential of a high up around 410 and its overall bullish trend still in effect. Why do I keep saying that? Why do I keep saying this bullish trend is still in effect? Well, I can see I don't have a crossover. It's plain and simple. It's very, very simple to interpret this. The first thing that I'm looking for is the blue line actually crossing there at that point. I'd be looking for this indicator to agree with being red and all three of these to be pointed down to say, okay, the AI is now saying this trend is expected to start going down. I don't have those conditions. By the way, I call these the 4 points of confirmation, right? And you can find out about that by going to VantagePointForecast.com. But the 4 points of confirmation would be the blue line crosses below that gray line, the predicted high and predicted low, both of them are expected to be lower. The neural index is red and the momentum indicators are bearish, all of them. That would give me all the confirmation I need to know that the AI is indicating down, bearishness. And we'll take a look at some of those. But I wanted to look at the SPY. I can also go to the next level with this and use some of the VantagePoint support and resistance indicators to further this conversation by layering them on the screen. Here I'm going to put on the verified support zone and verified resistance zone. These are some of the proprietary indicators available. Once you've mastered the 4 points of confirmation, this is the next kind of area we can get into from a support and resistance standpoint. For those of you that are in here that have VantagePoint and are using support and resistance, you probably know how valuable it is to understand whether or not there's bearish pressure coming from old price points or bullish pressure coming from old price points. And in this case, because we have our resistance level, and you can see it's marked very clearly with this red arrow, we also create a zone by using more than one resistance point, and we can see there's plenty of room between the close on Friday and that next resistance level, as well as a close on Friday and that first support level, indicating this support zone. In a future session, come back next time you see this. If you haven't already, by the way, subscribe to the VantagePoint channel, set notifications for this live, because in a future session, we'll dig into support and resistance in detail and just walk through step by step, interpreting support and resistance. I'll take the time to walk through, what I've learned related to support and resistance and then using it on the charts. But because I have plenty of room from the close to both support and resistance, again, this means that this price could do anything without the restrictiveness of support and resistance holding it back. Again, more indication that there is some consolidation happening. As we said, when consolidation happens, the market is expected after that consolidation to move one way or the other. Consolidation will cause the market to move sideways. Support and resistance, momentum, other indications, other indicators can help us understand which direction, whether it's up or down, are we expecting it to go. And that's what we're doing by looking at this. And right now we're still getting that sideways consolidation with a little bit of bullishness on the short-term forecasts related to this information. So when that CPI data comes out tomorrow, make sure that you're tuned in to understand what it can do for the markets. The AI is saying prices are expected to be a little bit more high, a little bit higher, a little bit more bullish than bearish, but still some consolidation expected. As soon as that report comes out, we're going to see the market move. And you can see there's room for it to move north and south. And that trader sentiment, depending on that CPI, will create that quick, drastic move. And right now the AI is saying more bullish than anything. If we're taking out sideways and consolidation, the AI is more on the bullish side, as I read it here on the screen. Now, make sure we're all on the same page. Fundamental data is not going to move the market all day, every day, forever. It has its impact. That report comes out, right? For instance, like earnings. Matter of fact, I'm going to switch my chart here, and I'm going to go to Disney. This is one of the charts we were talking about for a post-earnings forecast. But what I wanted to dig into is what can a fundamental report do, right? What can a fundamental report do or some sort of report that isn't technically based due to price cause a drastic move. And then what happens? Here's the drastic move. Earnings happened, right? There was a huge jump in earnings, and then the market pulled back. So we got a big gap off of earnings on Disney. Here was the close of the day before. Here was the open of the next day. That earnings report, you can see from a surprise standpoint, about a 43% surprise. And there was a big jump, and then the market fell. Well, that movement, that big move, causes this that report causes this big drastic move. And then what happens after that? What drives Tesla after that? And that's the question, because we know those things don't happen all the time. Quarterly readouts are what? Once a quarter, 4 times a year, right? There's not always news on, I might have said Tesla, I'm looking at Walt Disney. There's not always news on Walt Disney that could drive the market every single day. Well, again, if I go into the market details, now this is for Disney, so it's going to look different. There are different markets that are influencing Disney, right? There's several different markets on this list. These are the intermarkets. That's what's influencing the markets on a day-to-day basis, the global markets, what's happening here domestically, right? What's happening around the world. So after this data gets absorbed, after this information related to earnings gets absorbed by Disney, those intermarkets that we just looked at really quickly take over and can push the market. So we've got about a 72-hour window after a major report before those intermarkets take back over again, because you have to remember that fundamental impact changes trader sentiment. Traders make trade decisions based on that information, and it causes the market to move from a price standpoint pretty drastically. I think everybody understands that. Well, once it's old news, what is then driving the markets? And that's where the artificial intelligence comes into play and can really provide a major advantage, an edge. And what we're seeing here is that the blue line crossed below the black line. The neural index was red, and the predictive differences were all pointed down on Friday, saying we could expect, and these are all in agreement, right? These are all in agreement. We could expect prices to be lower on Disney today. Disney's down today, what is that? About 25 cents, right? VantagePoint indicated we could see Disney trade within this range. Here's the predicted high, which is right at the actual or just slightly bit higher. Here's a predicted low, way lower, right? Saying that we could see Disney trade between 105.79 and 109.96. Well, it's within this gray bar. Using VantagePoint, I had this gray bar on Friday at 6:30 p.m. Eastern time, right? Friday at 6:30 p.m. Eastern time. So knowing that Disney was expected to start going lower today based on this information, that provides an edge, an advantage. And it's much more convincing than what you were seeing on the SPY, right? The blue line is clearly below. The neural index is red, and all 3 predictive differences are in agreement. They're going lower, and they've created lower highs through the entirety of this trend, and even lower lows. Here's the beginning of this trend, and you can see we're lower, both from a high and a low standpoint. I know I'm scribbling a lot of lines on this chart, but what I'm trying to indicate is that this is clearly bearishness expected from the artificial intelligence working its way through the trend. That positive pop from earnings created a huge gap up, and then the selling started. That selling was indicated by this momentum before that selling started. That's how powerful the AI is. Before this selling took over, look at what these momentum indicators were saying and doing around the predicted momentum. Stop and think about that for a second. Just for a second, stop and think if you had this information day in and day out, and some of you do. Hey, Thomas. Yeah, I just saw your chat come through. If you've got this information, the comfort level that comes along with having this information is just remarkable. If this is a trend that you're taking to the bullish side and you see this crossover happen and you see everything that happened here, what day was this? 2-9, February 9th. You see all of this that happens, you pretty much know what you can expect. And then we get this clear crossover on Friday, 2-10. This is the end of the trend. For those of you using these forecasted information and holding through earnings, you can see from a trend standpoint, this is a very valuable trend. The underlying asset moved 21%. This is a hypothetical gain of $9,385 with a 500 share position, or maybe 5 contract position if you like to do options in 28 trading days. There you go. 21% on the underlying, a dramatic move. And then today, you would have been able to hold on to those profits. Why? Because you saw that crossover on Friday and had the opportunity and the information before the market opened today to grab an exit and lock in that trade, a winning trade. You know, again, a hypothetical example, but very clearly identified with the forecasts here in the VantagePoint software. So that's Disney post earnings. We've got bearishness expected. We've got bearishness forecasted on Friday at 6:30 p.m. Eastern time, and using this information for the current market today, tomorrow, and the next day. We can pull in verified support and resistance as we were talking about a second ago, and you can see that we got a close right below that last support level. If we get another close below that support level, we can expect this to move down to the next support level at 106.95 roughly, right there at that 107 or even lower. So all in all, a quick analysis on what we're seeing from a Walt Disney chart standpoint. AI is indicating bearishness, and at a minimum, the end of this bullish opportunity that started at the beginning of the year from a swing trading standpoint. For you long-term investors out there, you know, it doesn't necessarily mean that this is the end of the opportunity for you. From a long-term forecast, if this is a buy and hold stock for you, I've put the triple cross on here. The triple crossover is an indicator that uses 3 predicted moving averages. And from that standpoint, when it turns from red to yellow to, from green to yellow to red, the indicator does, that's when that investing opportunity is weakening, and it may be a good time to write some covered calls or mitigate some risk. So again, depending on how you're trading, if you're a 1 or 2 day trader, or maybe you'd like to hold things for a couple of weeks to a couple of months, or if you're an investor, these predictive indicators are adjusted. It can be adjusted by one click to give you that perspective. So good. All right. So that's Walt Disney. Walt Disney. Now, again, CPI is going to have an impact on the markets. It's going to have an impact on Disney as well as a lot of the other stocks. So if you didn't get a chance, if you just tuned in, make sure you go back and watch the recording of this about the CPI forecast expectations and the analysis on the SPY. We walked through the SPY in pretty good detail. So let's move on to, here's Tesla. If we're looking at Tesla, the question around Tesla, here was the earnings information, right? You can see when it came out. You can see what Tesla did post earnings. What does VantagePoint say about Tesla right now? Well, let's cycle through our indicators. Let's take a look. Our short-term crossover says that there's certainly some consolidation happening. We don't have a crossover yet, but there's consolidation because that blue line is pointed down. We can see that. Our medium-term crossover very clearly indicating consolidation, but still overall bullishness. And our long-term crossover, which is the 3-day trend predictor, indicating bullishness as well, with some consolidation working itself in because that blue line has moved sideways. From a predicted high and a predicted low standpoint, the predicted high here is saying we could see Tesla around 202 with a low down here around 191. That kind of move from a Tesla standpoint is valuable to understand, to say Tesla could go down to that 190 range, 191 range. Don't be afraid by that. The crossover has not indicated that this trend has come to an end. It's certainly weakened and consolidating. Our neural strength is bearish. Our predictive differences are rolling over and bearish. What does that mean? We're starting to see things shift. The overall trend is still expecting some bullishness. There's down days and up trends. There's pullbacks and up trends. Well, as a trader, we've got bearishness working its way into this bullish trend. What do? Manage risk. I always say, trading is hard. Got to minimize your downside risk before you go maximize your upside potential, which means factor your risk early before you jump into a trade, and manage your risk throughout that trade, and the profits will come. If you worry about how much am I going to make, or I want to make this much, and you don't minimize your downside risk, you're unnecessarily risking your money, and that's dangerous in my opinion. Again, this is just education, but not trading advice here. VantagePoint indicated we could see a low down there around that 191, 190. You can see in the top left corner it says 191 and 2 cents. Well, this is on top of a very valuable forecast that came out on January 9th. And if you go back and watch any of the previous videos on our page, you'll see that we walked through these forecasts, and we can see that there was a very good trend prediction. That trend prediction so far from that crossover point to the close on Friday, it's about a 65% move in Tesla. It's a substantial move, right? A substantial gain. 500 shares. Heck, we can kick this back to 100 shares. One options contract could have produced over $7,000 in this hypothetical example. What do I do in that situation had I made that money? Well, we've got a prediction that we could see, Tesla go down to that 190 mark. So you've got to utilize your money management rules according to your trade plan to set a stop loss, or do a mental stop, or find a place where it's like, if it gets here, I'm taking my position off, and stick to it. Don't let the emotion of the situation impact your decision making. In my opinion, that's dangerous. Set a stop loss, depending on where you grabbed your entry on this, depending on what your stop loss rules say and how much of a pullback your account can withstand before you exit that position. And I don't mean a pullback to a loss, right? I hear a lot of traders saying, "Oh, I'm still up, I can let that puppy ride." Sure, you can do that. Or you can make sure you lock in a profit that is, a profit that could change your entire month and have a dramatic impact on your year, like a 65%. Heck, even if you set a stop loss at 180 and say, if it comes down to 180, I don't care what happens, I'm out. That's a 50% positive move on the underlying asset from this forecast if you had this forecast. 50%. That's huge. And you mitigate or you minimize your downside risk by using a 180 stop or 185 stop, depending on what your trade rules say. But no matter how you slice it, there's some weakening, there's some consolidation expected in Tesla, not trend reversing. There's still bullishness in this trend. We see it, but enough weakening that it's time to tighten some things up if you haven't already, to make sure if it goes further, you lock in a substantial gain. 50% on the underlying is nothing to sneeze or laugh at. What did they say? One of those two. So we're still expecting some overall bullishness with some consolidation happening, and we can throw on support and resistance really quickly and see that we do not have our two closes through that resistance level. So that consolidation is real consolidation. If we get a second close above this resistance level somewhere, 2 consecutive closes after that break could indicate more bullishness or a resistance breakout. We don't have that. So again, this consolidation is expected, but not to the tune of a trend reversal yet. The artificial intelligence will update 6:30 p.m. Eastern time tonight and provide you the forecast for tomorrow, the next day, and the day after that. Hey, John. Yep, the replay will be available. John was asking, he joined late. Will there be a recording? Yes, this will be saved on our VantagePoint page for John and for everybody else. Just go to the VantagePoint YouTube, subscribe. You're watching it here on this page. Find the button or the thing that says subscribe, and then you can set a notification and you can go through the videos on our page. This will be housed right there on our channel. All right? Good question. I appreciate that. Well, let's keep on going. What does the VantagePoint software say about American Express? American Express, you can see there was earnings, a big jump on earnings here. Then the blue line, and remember, we're talking about that 72-hour window. This is the area where earnings has an impact. I want to talk about something as well. And this could be a topic. If you like this explanation or this topic, let me know in the chat, and I can do it on a future session if you want to. But there's something to be said for this gap and this candle, right? This gap and this candle. And this gap is an earnings gap, and it's a big gap. This candle provides some valuable information around the future direction of this stock based on this combination. It's what we like to call here at VantagePoint. My good buddy Gordon, has kind of drilled this into my head. But this is one of those things where this is a catalyst. This gap with this candle means something. In Disney, this gap with this candle means something else. Very similar interpretation, but one means one thing, one means one direction, one means the other. There's some very good rules around seeing those gaps and higher range, bigger days following those gaps. What the artificial intelligence here is looking at, when we look at it, and you can see that the blue line is above the black line. I'm going to circle that 72-hour window, right? Here's the earnings. Here's the gap. Here's the 72 hours that's impacted dramatically by earnings. And then the intermarkets take back over. So what the artificial intelligence has been saying about American Express since that earnings information was absorbed by the markets is bullishness. What the artificial intelligence is saying about American Express on Friday at 6:30 last night, or Friday night, was more bullishness. I have the blue line above the black line and pointed up, right? Everybody can see that on the screen. I have the predicted high, much higher, right? Up here around that 181 mark. I have the predicted low higher than the previous day. I got bullishness and bullishness and bullishness happening up here. I do have some bearishness from the neural index, right? I have some bearishness working in from the momentum indicators, and then I've got some consolidation expected. Well, here's the great news about VantagePoint. You can work it in a sequence. If my blue line is pointed up and continue going up, and I got a higher high and a higher low expected, that could give me all the information I need to know that I'm expecting more bullishness. The fact I've got a neural index that's red and momentum indicators saying that there is some weakening momentum tells me I've got to think about managing my risk, mitigating my risk, and protecting my downside. Again, back to that stop loss conversation, right? 174.50 is a great stop loss indication based on what I'm seeing here. Again, just from an education standpoint. But if we add support and resistance, and we've got other indicators we can add, certainly, and we will do that in a future session, but we can see that if we can break above this resistance level, that's very clearly right there at 180.28. If we can break above that and stay above that, VantagePoint is predicting that it goes above that with that predicted high. But if we can stay above that, then we'll see American Express move even higher. So we've got bullishness forecasted here. If we go to our longer term forecast, we've got bullishness expected there. If we go to our triple cross, we've got bullishness expected there. I've got some questions coming in around where I can find in the VantagePoint software Tesla. It's for those of you that are using VantagePoint, it's as simple as right-clicking on the word Tesla. So I get on that chart and I can go locate in market tree, right? If I go locate in market tree, it kicks me right into Tesla in the market tree, and I can see it's in the consumer cyclical sector, right? Just to give you an explanation of where to find it. That's how it works, and that's where you can quickly find it. American Express, I can do the same thing. I can right-click on this, and I can say located market tree, and it'll show me what sector American Express is in, and it's in the financial sector. You can see that right here, all right? I appreciate that. I can go also to my market details and click on the general tab, and that provides me information around the sector. It says right here, U.S. stocks financial. A lot of different ways to do it, but I appreciate the question around finding these assets in their appropriate sector. All right. Let's keep it going. Let's go Apple. While we're looking at Apple, by the way, if you're here and you're tuned in live, I'm going to go through Apple. But if there's a certain chart or something you want to take a look at, I'll take some requests. I feel like a DJ. pop a ticker or a chart, and if it's in the VantagePoint software, I'm happy to pull it up and just do some quick analysis on it. I'll do a couple of those tickers you want to see once I'm done here with Apple. All right, looking at Apple, what do we got here? We've got some consolidation happening from an Apple standpoint. The blue line is still above the black line, indicating still bullish trend. We've got a predicted high that's higher. Here's what I mean. Here's Friday's high. Here's today's predicted high. We've got a predicted low that's higher. Here's Friday's low. Here's today's predicted low. Both of them are saying higher, higher with a bullish trend expectation. We do have consolidation happening from a strength standpoint. We have consolidation working itself in from a momentum standpoint with that same little tail we saw on the SPY saying short-term, one-day momentum expected to be bullish. So again, the predictive indicators are not in agreement, but more of them are bullish than bearish or consolidated. And that's one of the things I hope everybody takes away from today's live session. Or even if you're catching this on the replay, utilizing multiple indicators. Let me get back to my chart. Utilizing multiple indicators is valuable as long as you don't get analysis paralysis. And the best way that we have found, that I've found to use a host, and sometimes I use 30 indicators at one time, is to understand each indicator from a bearish, bullish, or a consolidation standpoint. Once I understand those indicators, I can then do a tally and say how many of them are bullish, how many of them are bearish, and how many of them are consolidating, giving me a good indication, a logical indication, not an emotional one, around where things are expected to go. And I've got more bullishness than I have consolidation or bearishness based on what we're seeing on the indicators. All right, good. So overall, from an Apple standpoint, we can look at this and see that we've got our short term indicating some bearishness. We've got our medium term indicating some bullishness with consolidation, and our long term indicating some bullishness. Our predicted high indicating bullishness, our predicted low indicating bullishness. We've got some bearishness expected with the neural index, bearishness with some of our momentum, but then also some consolidation from a momentum standpoint. So that's one of those situations where we look at this and say, all right, I got to protect my downside, right? Again, that stop loss comes in. Maybe it's 147.50 or somewhere with that recent low. Based on your trade plan, again, go back to our trade plan, make a decision around stop loss placement, but you can see from the beginning of this trend to Friday's close, that's a substantial move. Roughly, as an example, 15%, 24 trading days. From an Apple standpoint, that helps you really do some things by having more confidence, being able to ride that trend. That's on the backside of this powerful downtrend. Look at this. For those you like to buy puts, short the market, write covered calls, these two trends side by side, 300 shares or 3 contracts, very, very profitable. And this is a hypothetical trade example. We're talking about over $11,000 in these two trends using this forecasted information. Just watching the chat box really quickly to see if I see any tickers come through. As I said, I'll take a few minutes and just do some analysis on maybe a ticker or two you want to see. As you can tell, this software, and by the way, for anybody that's watching this software has been available since 1991. It's patented technology that does forecasting using artificial intelligence. If what you're seeing here can really help you and you want to ask more about it or dig in, happy to. Just go to VantagePointForecast.com. That's it. Also subscribe to the VantagePoint YouTube page and turn on the notifications for these live sessions so you know when they're coming. All right, good. Let's see here. I don't see any chats coming through, so we'll give everybody a chance in the chat. Shopify, all right, Jeff, no problem. Let's pop up shop. There we go. There we go. We've got earnings coming up on Shopify here, February 15th. So we've got to be cautious around Shopify. By the way, this earnings flag and this information is available in the VantagePoint software. Once you've mastered the indicators, the predictive indicators, right? You can add that to your platform. Very customizable. You can talk to a VantagePoint university coach or somebody here at VantagePoint about how you can add things to your software that may be interesting to you. That's up to you, completely optional. What we're seeing from a Shopify standpoint prior to earnings is the blue line crossed below on 2.9. The neural index was red. The predictive differences were pointed down with some consolidation here on the 1 day. Not pointed up, but sideways. The predicted high is lower. The predicted low is lower. So when we look at Shopify, what VantagePoint is saying about Shop is that we could see some bearishness going on with a little bit of consolidation from a momentum standpoint. Again, I'll say earnings is expected here. Earnings, looking at this, is after the market close on the 15th, right? Estimated a minus 14 cent EPS loss, earnings per share loss. So what we're seeing here is the results of that earnings coming up and the intermarkets. The intermarkets are saying this bullish trend came to an end a few days ago. Let's see. This bullish trend came to an end with a 36% change in price, Jeff. Jeff had popped this one in the chat box, but when you look at this, you can see there is bearishness expected. If I go to my short term, bearishness has been forecasted since February 6th, right? You can see that all the indicators on February 6th said, hey, this trend is coming to an end. The medium term agreed February 9th. The long term, the 3-day prediction is still saying major bearishness, but hold on because there could be a little bit of bullishness left in this trend. That's the value in this information. We're getting more bearishness than anything. Does that mean that Shopify is going to tumble prior to earnings? Not after earnings, but prior to earnings. VantagePoint is saying bearishness, not a rout or a bloodbath, but certainly bearishness, and taking the profits out of this. In worst case scenario, no matter where you slice it, the profit taking opportunity has already been presented, depending on what your trade plan says and based on what the artificial intelligence started saying. 2.6. If I put support and resistance on this, Jeff, and for anybody else interested in Shop, you can see that it has broken 1 day below that verified support level. Those are automatically drawn. I don't have to try to figure them out. The VantagePoint software, for those of you that are interested in taking your trading to the next level, includes some of these indicators that you can add on. They're add-ons. They don't come right out of the box, but you can see we do have a close below that 49.32 level on Shopify, right? If we get another close below that 49.32 level, then that's an indication that this could even fall lower on the next support level. Look at this. Next support level is down here. There, let's call it 38, right? 37.85, 38. So that's that could mean some big things from a Shopify standpoint if it breaks below this support level and stays below the support level. Regardless, the artificial intelligence certainly saying more bearishness than anything for Shop. XLE, energy sector ETF, love it. There we go. Got a little pop in XLE, the energy sector ETF. If you look at this, the blue line crossed above, the neural index is green, the momentum indicators are forecasting some bullishness expected. The predicted high was saying we can see a high up around 90.74, the predicted low, or 90.79, excuse me, 89.45. Whoop. My Apple Watch has been listening to me the whole time, I guess. Couldn't understand what I was saying. Well, hopefully you can understand what I was saying because it couldn't. But when we look at this, XLE is saying that we could expect more bullishness today from the energy sector. Again, let's cycle through our indicators. Our short-term indicator started saying February 7th bullishness was going to start working itself in. That was where's my calendar here? February 7th was about a week ago or so, right? The medium term crossed over recently. The long term 3-day is still saying consolidation happening. So we can see with momentum being bullish, the strength being bullish, predicted high being higher, predicted low being higher, medium term saying bullish, short term saying bullish a week ago. We can expect some bullishness today related to XLE. Who was that asked for that? I didn't remember your name. I apologize. Kevin. Thank you, Kevin. Thank you for that. Appreciate it. Netflix. Let's take a look at Netflix for Pablo. Right? There we go. There we go. On Netflix, when we see Netflix, we can see that After the earnings, there was still some bullishness happening in the market. If we go to our long-term crossover, the long-term crossover happened Thursday last week. The short-term happened February 3rd, right? I think we can see that. The medium term, the short term happened February 7th. So no matter how you slice this, my friend, the artificial intelligence was indicating a profit-taking opportunity, and the 359 was the point at which that prediction would have been actionable. Taking advantage of that prediction would have helped you save quite a bit on Friday's move. Friday's move was a pretty big move to the south side. It moved bearishly. Let's see. There you go. Pretty dramatically on Friday, from a Netflix standpoint, over what was it, 2% drop on Friday? 4%. 4% drop from the high to the low. Having that forecast, and Pablo, this is the value in having this forecasted information in advance. Taking 4% out of a 17% trade or 17% move kicks it way down, right? Now, it doesn't turn it into a loser because this forecast on the front side was so early and so valuable. That short-term or medium-term forecast happened here on 1/3, right at the beginning of the year. So taking 4% out of that doesn't turn it into a loss. But just do a hypothetical ROI for me, right? Let's say you give back 4% of everything. No, heck, let's turn it around the other way. Let's say, and I'm just going to do one share, right? Let's say that you give back 4% of everything. Let's say you kick that from this trend that's about a 20, let me go to the close, 21.5%, right? We're going to shave 4% off of that, so we're going to move that down to 17.5%. That $63 move is now worth $52. That's $10. $10, right? Just easy math, quick math. 25 shares, that's $250 on the front side. Back side, $250 on the front side. If we just do some easy ROI, and again, this is hypothetical, but we're $250 on the front and $250 on the back, right? That's $500 a trade. I always do this ROI because the math is easy. Let's say you trade 10 times a month, right? Well, $500 a trade, 10 times a month, that's $5,000 a month. That's $60,000 a year that you can either give back to the markets by not having powerful artificial intelligence forecasts, or $60,000 a year you can hold on to, or somewhere in the range. Again, the hypothetical ROI, but it shows you the value. What we just did, this exercise, shows you the value in forecasting and utilizing this information, and why I rely on it so much. That doesn't mean that the trend can't come back. But what that means is, if you minimize your downside risk, lock in profits more often, it can do it more consistently because the artificial intelligence is providing you information that's valuable in dollars, and it also makes sense, right? I know we've gone in through a lot of details, and again, everything I've provided today is not intended to be trading advice. It's more just education, what I've learned, and a deep dive on the platform that I use, the software that I use day in and day out to understand the overall directions of individual assets, markets, futures, commodities, Forex, cryptocurrencies, and hopefully this helps somebody in some way. I think we've covered looking at the Home Depot, last one. Home Depot. Let's pull up Home Depot and take a look from a forecasting standpoint. We've got some bearishness happening on Home Depot. We can see the blue line cross below 2.9. I think that's pretty clear to see. Again, a great example of where that medium-term crossover. One thing I want to point out on Home Depot, I want everybody to look at this, because this is one of those questions of why trade Home Depot when we're seeing this channel, right? I just drew the channel, right? We've got this channel happening on Home Depot where these lines are going sideways across my screen. Look, I can go from Home Depot to American Express, and you can see a difference. And I just left. I shouldn't have erased it. Let's do it again. I'm just going to leave this channel on the screen, right? I'm going to highlight this, highs and lows, and this goes back to middle of December. And I'm going to go to Tesla, right? Look at that. There's no channel going on in Tesla. Look at Walt Disney. What I'm trying to show you is that sometimes people, and I'm not saying this is you, I'm not saying this is, I'm not saying it's good or bad, right, John? I'm just saying sometimes the name and the name of the stock and what I'm expecting it to do, maybe I hold it long term, whatever the case is, causes me to go find these stocks and stay in them and hold on to them. Not necessarily my style. My style is to go find something that's expected to trend one way or another and then utilize these forecasts in my favor. Home Depot is not one of those things that's jumping on me at this time. Doesn't mean it's a bad stock. Doesn't mean it's a bad company. Doesn't mean it's not making you money. Heck, from a short-term standpoint, if I'm somebody who likes to hold position for a day or two at a time, could be a very productive forecast using the one-day forecast on Home Depot. But the fact that it's been channeling sideways since the beginning of December with some very short moves, look, very small, a lot of whipsaws going on Home Depot, is not something that I'm going to turn my attention to and say, hey, money-making opportunity. So that's one of the what do they call it? The smell test, litmus test. I don't know what you want to call it, but very clear to see that this is one of those assets that is not of interest to me based on what it's been doing for the last month and a half. But nonetheless, John, I want to do some analysis for you. I can see that overall the short term is saying bearish. The Neural Index is saying bearish. Momentum has been leaving with a bullish momentum. Look at this little bullish momentum pop happening on the 1 day. The predicted high is saying higher and the predicted low is saying lower. We've got an outside candle on the predicted high and predicted low. Again, more uncertainty. The medium term is saying bearish. That line is recently crossed over my long term. Look at this. Long term is just, it's like that. Those indicators are braided going sideways across my screen. Again, very, very concerning from a trending standpoint because this thing could go up. It could go down at this point. The triple crossover, again, same situation. Green, yellow, red, green, yellow, red, yellow, green, yellow, red. Again, all within a month's time, John. Not to say that this doesn't have some very short-term money-making opportunities. What I'm saying is that the artificial intelligence is saying, hey, here's the forecast, but understand these are high-risk forecasts because these are not, it's this stock, this specific stock is not expected to do much trending, unlike some of the other stocks that we've looked at. All right, good. Hopefully that was helpful. Let's see. I've got 12:45 Eastern time. I'm not going to get an opportunity, Candor, to go through HIMX right now, but you can definitely go to VantagePointForecast.com, as can anybody, and we can reach out to you and we can take a look at a stock that you want to look at one-on-one. That's something that we're always able to do here. An expert like myself here at VantagePoint is willing to do that. But for now, I wanted to just say thank you for being part of today's session. This will be found in the playlist for lives right here on the VantagePoint page. If you haven't already subscribed to our VantagePoint channel, please hit the subscribe button right now. My name is Daniel. I'm part of the VantagePoint team, and I want to say thank you for letting me give you the view from my vantage point. And happy trading, everybody. Have a good day.